BHP is a large mining company that operates primarily out of Australia and extracts all the materials you need to make steel, copper, nickel, a couple of different metals that are really necessary for production around the world. They've been supplying, especially the Asian region, with a lot of those materials to build cars, for construction, the copper for electronics. It's a really important materials company in the overall supply chain to the world. They've been a profitable company. I like that they pay a big dividend, but metal prices have not been very high lately. They were very high 2 years ago, and BHP was incredibly profitable. But now with the down commodity prices, what does their P&L and their financials look like? Well, they had their earnings today, and I'm able to get my hands on the most recent full year close. They closed their year on June 30th, and I could reevaluate the company, do some analysis, and see if it's a good investment. My name is Victor. I have an MBA, a lot of business experience, and I like analyzing companies. I like sharing that analysis on YouTube and sharing that with other investors like yourself. Do me a big favor and like my video and subscribe to my channel. That'd really help me out. Now, let me review my process of investing and review my analysis of BHP. So I like to look at a stock, at a company, and answer 4 key questions as my process, and then decide whether I'm going to buy, hold, or sell a stock. First, do I want to be part owner in the company? Do I really like the industry that they operate in? Second, do I think the management team is operating the company well, and therefore the business is performing well? Is debt under control and less than 3 times EBITDA? And last, I want to discount the stock. I put my hard-earned money in as an investment on a stock, and the best way for me to realize gains is to really take advantage of a stock that's unappreciated, being sold at a discount, and I could see my investment rise over time. Based on the answer to those questions, I buy, hold, or sell a stock. So the BHP story is easy to get one's head around. They're a mining company. It's a very old industry. We've been mining the earth for a long time. In their case, they're mining certain areas of Australia, and they now have mines in the US, South America, as well as some parts of Asia. And they're extracting a variety of minerals and materials in order to produce an end product, which would be steel, copper, useful nickel, a variety of metals that the world demands. And that's basically their business. It's a capital intensive business. It requires a lot of people, a lot of manpower. And it's a business that in the right periods when commodities are up, it's incredibly profitable. And yet when material prices are down, commodity prices are down, it's an opportunity because you can buy before prices go up and usually get the stock at a good price and see your investment go up in value. I really like BHP. I think it's a really good business. They have very good mines. They have rights to key areas to mine, and the mines are very productive. I also like the industry. I think that I have a lot of investments in technology and a variety of industries like pharmaceutical. And I have 2 investments with mines of this type. And they are a high cash producing investment because they pay high dividends. It is very cyclical because when commodity prices are down, you'll see the stock price go down. But when I buy correctly, I'm always ahead of the game. I'm always operating with a gain on these investments. And when commodity prices are up, boy, my gain, I'm doubling, tripling my money on my stock investment. And when commodity prices are down, my gain shrinks, but I'm always paid that big dividend. BHP announced their earnings for a full year that ended June 30th, 2023. And you can see that their top line revenue is going down. It was almost $57 billion in 2021, went up to $65 billion in 2022, but it's come back down to about $54 billion in 2023. Now, profits, they've been profitable in every year. I really like that. They are just a profit machine. and therefore down to net profit. I like that consistent profit and their ability to pay that high dividend. So although revenues are down for the company's really maintained their profitability. I'm glad to see that they're nice and profitable, and they made a lot more money than they're paying in dividends. This is really a down year. So if this is as bad as it's going to get, it's a really good business. When commodity prices rise, you're going to see that their profits are going to rise very quickly. 2022 was a really good year. They had a very high EBITDA, earnings before interest and depreciation. And the changes have been predominantly this pricing for commodities has been the biggest negative aspect to their EBITDA, their profit, as well as a little bit of inflation, but mostly the pricing difference. Commodity prices are down. So it's really lowered their EBITDA from 40 billion down to close to 29 billion. One good thing to see is that their volumes actually increased. So the company is operating very efficiently. They can continue to produce a lot of product. They're just not getting as much money, I guess, per ton of steel as an example. So investing in BHP requires that you really keep an eye on commodity prices. For example, iron ore, I believe this is their biggest product by production. It hasn't, it's kind of at a low point. A couple years ago, 2 years ago, it was at a very high point. So they were making lots of money. So as this rises, you'll see that their revenues will rise. It looks like copper and nickel have really weathered the commodity recession, so to speak, better than the other materials. And it's probably because, copper is so necessary in electronics, as well as nickel, which is used in many different areas as well. Metallurgical coal, that price is also down. And then potash is also down. So as these commodities pick up, so will the company. I'm looking at as potentially, since this company is profitable, if commodity prices are low, well, they're not going to stay low forever, especially as the economy picks up. If I think the economy is going to avoid a big recession and globally we're going to see some growth, commodity prices are expected to rise. So I'd be buying ahead of that. And again, you're being paid a nice dividend to wait around. So it's not like you're just waiting on your money. You can buy at low price and then watch the stock price rise as commodity prices rise. The balance sheet looks really good. First, looking at their debt compared to EBITDA, they're less than 1. And I want it to be less than 3 if you compare debt to EBITDA. But looking at the cash balance and then the amount of debt, they could almost pay off all their debt with their cash. Probably, take all their cash and maybe 3 to 4 months of producing EBITDA in order to pay off debt. So in general, I think their balance sheet is in strong position. BHP has been a consistent producer of cash. Looking at cash from operations for the last 3 years, they produced 33 billion, almost 39 billion, and now it's down to 28 billion, which is very good cash generation. They are a business where you have to put in a lot of capital back into the business, and capital is right down here, replacing all the machines that you're using to dig up the minerals and materials that you need to get out of the earth. And you can see that when we compare the amount of money they had to put back into the business versus the cash they generated from operations, it's still left north of $21 billion of free cash flow to the business. I believe BHP is currently discounted by 72%. And what I mean by that is that I believe each share really has a value of $103, but the stock market will sell you shares at $60 a share all day long, as many shares as you would like to buy. How did I arrive to those numbers? I look at free cash flows that a company produces, and I value those cash flows based on today's value of those cash flows. I also look at earnings per share and try to value a company based on that ratio. Let me take a look at free cash flows first. So the cash flows produced, this last year that was just closed was $21,155,000,000, which is a very good cash flow run rate. I'm going to grow those cash flows by 10%, expecting that at some point these commodity prices are going to rise and you're going to have and increase the free cash flow out of the business. Long-term growth at 3% on average, nice low growth rate. So their terminal value, all cash flows beyond year 4, all cash flows into the future, are going to be around $414 billion. I take all those free cash flows and discount them, present value of those cash flows, and my discount rate is going to be 10%. It's going to be a high weighted average cost of capital. This is a mining company, a little more risk. They have a very good balance sheet, but I'm still going to go with a high discount rate. They're also an international investment for me. They operate predominantly out of Australia. They are not traded on the New York Stock Exchange. They're traded in the South African exchange, but you can buy shares through the American exchange as well. So based on a discount rate of 10% and all these cash flows we expect in the future, I calculate that all those cash flows are worth $334 billion in today's value. I add the cash that they have on their balance sheet and take away the debt, so I can get to an equity value of the company, of the business, of $331 billion. Their current market cap is only $141 million. So using the cash flow method, the cash flows are worth 120% more than where their market cap is currently trading. So another way of saying it is each share is really worth $132 if you look at the cash flows that they produce, but the marketplace will sell you shares at $60 per share, as many shares as you would like to buy. All right, so let's look at earnings per share. So first, their earnings per share for the current year was higher than this number, but this is what analysts are expecting for the year that just began on July 1st and will end June 30th of 2024. And it's 431, a little more conservative. So I'll take the conservative route on earnings per share. Price earnings of 12, nice low price earnings, nice low growth rate. And I'll use this formula to determine what the value of the company would be is if we look at that earnings per share number. And I get to a value of each share of $45 per share. But the marketplace is pricing the shares at $60 a share. So looking at the earnings per share value method, we're actually looking that the shares are being sold at a premium of 25%. I combine these two valuations. I put more stock in the free cash flow method. I actually take 2/3 of this method, and I take 1/3 of the earnings per share method, and I combine those, and my blended rate, or the blended discount that I'm establishing for BHP, is 72%. Again, I think that each share is really worth $103, but the marketplace will sell you shares at $60 a share. So let me scorecard BHP, run them through my process. Do I want to be part owner in this business and be part of this industry? Yes, I really like this business. I think it's counter-cyclical to some of the investments I make, and it's good diversification also internationally, diversifying into Australia. The company management team is doing a great job. Debt is well below 3x EBITDA. There's a very good discount available on the stock. Therefore, I'm buying shares of BHP, and we'll be buying shares today on BHP. Over the past year, BHP stock has really gone up and down. So in 2022, you saw the price drop, but then toward the end of the year, it just had this really, really nice rise, and it peaked in February timeframe. But just in that period of time, the stock went up, 80% or so, and then it dropped significantly. And since then, it's been going up and down, and more recently going down with the rest of the market significantly. I think the stock is actually valued $103 per share, way up here. So there's a lot of value there. And I really like buying into companies like these and just waiting around for commodity prices to go up, principally because they're paying a 9.5% dividend. So 9.5% on an investment. Right now, I'm sitting on a gain of BHP, and that's really because I've been buying into this stock for several years. So I can buy when it's really low, and then sit on the stock because they pay that high dividend. And when they're really high, like up here, maybe take some profits and ring that cash register and wait for prices to come down again. So BHP is an interesting investment. It is riskier because it's tied to commodities. If commodities are low, the company isn't going to do as, sell as much and not make as much money, and cash flows are going to shrink. But when commodities go up, this business just really just rakes in the cash, and they pay bonus dividends and so forth. So it is a riskier investment, but so far so good with BHP. It's really returned a very good return for me, and I'm happy to be a stockholder. I'll continue to buy shares, especially on low points. Keep in mind, I'm not recommending you buy BHP. Weigh your investment decisions really carefully and make sure that every investment is the right type of investment for you. Do me a big favor and like my video and subscribe to my channel. You can see more videos like this one if you subscribe. With that, thank you so much for watching. Good luck investing in 2023.